What's up, everybody? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside Dino. We're going to go over a lot of what's been happening in the markets over the past week. I know we are starting to sound like a broken record here, but it is just pretty bullish week after week here. We're seeing pretty crazy returns. I'm going to jump into it really quick and share my screen. So excuse me really quick.
Getting ridiculous, Brian.
It really is. Yeah, we'll be touching on quite a few coins here, mainly focusing on Bitcoin, Ethereum, and Binance Coin, among plenty of others. We'll touch on RAN a bit, and we'll, of course, as always, take a few questions from you guys and requests regarding specific assets you'd like us to take a deep dive on. As always, we want to remind you guys that nothing that we're showing today is investment advice. It is intended to be educational to help you understand exactly how to use our platform to find meaningful and interesting data about the markets. So keep that in mind. We aren't here to make predictions. We're here to show why pumps and dumps have occurred and what to look for upcoming signals that might be happening for the next week before our next call. So what we're looking at right now is our 7-day returns for the top 100 or so assets on the markets. Right now, clearly the story is Binance Coin, which has jumped ahead of Tether and is now the third ranked market cap asset. It is plus 139% over the past week. It's currently sitting at about $318. Absolutely crazy to say we predicted that would be false. We certainly did not. But there have been some signs that something could occur, and we'll jump into that a little bit. I'm sure Dino has some opinions on what metrics may have stood out prior to this big pump. Other coins that were pumping include Pancake, Dash, we had Raven, Venus, Dodo, Gollum, Bitcoin Gold. And as you can see, I mean, I can't even go through all of these double-digit return assets, but there have been many that were above 50%. So 1.5x or above is just a pretty common occurrence over the past week. We can see that Bitcoin was up a modest 11%. It's up a little over 53,000 now. Ethereum is still teetering, getting close to 2,000. It hasn't happened yet. But because of the fact that it is doing well, we're seeing plenty of ERC20s that have really been thriving, REN among them, as well as many others that we'll touch on here. But long story short, huge week for crypto. Even in the last, I'll show you the last 24 hours, we still have pretty crazy returns. Bitcoin and Ethereum pretty much break even, but look at just the last day for Binance, up 65%. Again, Pancake had its big surge, but a lot of these assets really took off. REN is having another big run right now. I'm not sure where it is on this graph. I won't waste time trying to find it, but I'll touch on that one a little bit in particular. Now I'm going to start off showing the model for our NVT token circulation. For those who don't remember, or this is their first call checking us out, what this model does is measure simply the ratio of market cap versus token circulation, which is the amount of unique tokens being moved along the network. In this case, we're looking at Bitcoin. So it is the market cap divided by token circulation. The lower the bar, since this is a ratio, as opposed to just raw token circulation, which would be higher the bar, the lower the bar, the more bullish in this case, because it means there's a smaller gap between market cap and token circulation, which is a good thing. It means that there's more usage happening on the network. As we can see, we're in our 5th straight month of being below these trend lines. These trend lines are intended to set context and allow for some fluctuations over time while still being bullish, as we can see, like this bar here. Even though it's higher than, say, these red bars because of the trend lines, it's allowed this to be bullish and allowed the price to basically follow. So looking historically, very accurate model. We believe in it. And right now it's saying that we are getting enough token circulation to justify this continued price run up above 53,000 where we're at right now. Now we are getting close to these trend lines. If we finally start to jump over like this green one here, that'll be kind of a neutral sign. And typically when we're in neutral, these yellow bars, they often signal reversals, right? So when we got here back in late 2018, early 2019, these 4 orange and yellow bars basically indicated that it was time for a bottom to occur, and eventually we had these 3 greens, took off, then a bunch of reds again, fell down, so on and so forth. So keep that in mind. We'll be watching closely, and if we are updating next week or 2 weeks from now that it's finally looking yellow or so, that might be a bit of a caution flag that token circulation has finally caught up with where the market cap should be. On the Ethereum side, just an absolute sea of green, guys. So based on this alone, we're more than justified to continue seeing this crazy price pump that Ethereum has been on. We are at the point where we're at a very sentimental figure for many. 2000 is going to be a polarizing price where, you know, a lot of people will think that it's justified. There might be a few that think that it's overvalued once it gets there. These models don't care about sentimental figures. They care about whether we're getting an appropriate amount of token circulation versus the market cap. Even if we were at the $2,000 price level, this bar would be green. So keep that in mind. Ethereum, based on this model alone, looks to be a very solid bet. So just keep that in mind. It's not as close as Bitcoin would be to actually starting to hit any trend lines. Seems to have a little more room to run. Yeah, I'll just touch on those two for now on NVT. I want to also jump over to our MVRV model. What this model does is essentially measure how it's like an MVRV Z-score for those familiar with that metric and that name from previous data studies. But what MVRV essentially measures is the amount of average trader returns from a percent basis. And if you see a lot of bars in the negative like this, that means that there is a lot of positive returns going on. And the more negative, that means the further from the norm that divergence is for that particular coin. Right now, it's basically a sea of red, as you would expect when we're just having multiple weeks of just double-digit returns everywhere in crypto. Bitcoin right here is sitting in a danger zone of negative 1.42. Just keep in mind that this is kind of a something you have to take loosely, because MVRV is one of those metrics that can remain irrational for a long period of time, especially when we're in a bull run like we are right now. And as of now, Bitcoin, Ethereum, the average trader returns are quite unbelievable. This essentially means that we're in like a top 2 to 3% highest amount of average trader returns when factoring in the 1 day, 7 day, 30 day, 90 day, 6 month, and 1 year average trader returns. But it could last a bit longer. It just means that when there is a correction, it could be a sharp one. But we have to factor this in along with many other metrics, and there are plenty of bullish and bearish indicators out there right now, including the bullish one that I just showed on NVT here.
Right.
Keep that in, yeah.
If you want to share the 365-day MVRV for Bitcoin, and then take the last 5 years, so from 2016 to 2021, just to kind of give a perspective of where we are at the moment, people can see that according at least to this on-chain indicator, we are very much in the overvalued territory. So the way that the MVRV works is that the higher it is, that means that the average profit margins of a particular group of holders, currently we're looking at the average profit margins of addresses that have acquired Bitcoin in the past 365 days. So the higher the MVRV, and currently it's about 110%, which means that their returns are on average plus 110%. The higher the MVRV is, that means that the more risky it is, or the more risk exists that they are going to start claiming some of those profits and begin selling off and exerting downward sell side pressure. So as you can see historically, we are certainly comfortably in the overvalued territory right now. So there's one thing that should be kept in mind is that usually we do see the MVRV actually flatten out over time. The reason for that being is that, at least the premise is that with each sort of market cycle, traders become a bit more risk averse and therefore start claiming profits a bit sooner than they used to in previous bull markets, because they learn from their past experiences. They experienced pains last time, or they kept holding the hot potato for too long, and therefore this time they are trying to kind of get out a bit too early, or a bit earlier. So currently we're pretty much at the exact same point where we were at the 2019 price top. We are still about 40% away from the from the 2018 high for the 365-day MVRV ratio. So long-term holders are currently about double up on their initial investment and a bit higher than that. So basically, what this means simply is, if you were looking at the sentiment of current traders, just keep in mind that if they become a bit shaken about the market, a bit bearish, there's a lot of unclaimed profits that they can begin pocketing, and in their as a result, we might see a correction incoming. That being said, I will say that this is clearly a bull market and anything can go. So Brian, if you now want to show the BNB or Binance coins 365-day MVRV, you'll just see that for a lot of coins, we're currently in like uncharted territory. Like we've never been here. There is no, I mean, we can talk and we will talk about BNB from a fundamental perspective. Nothing has really shown that BNB is supposed to be worth $300 a week ago. All of their MVRV ratios are now ridiculously high. They're the highest that they've ever been. We are clearly, as far as on-chain data is concerned, in a very in uncharted waters, but overall it seems in overvalued territory. So it's what the bull market looks like. Sometimes these returns can get astronomical, and you can't always rely on like solid fundamentals. Like if I saw a plus 110% returns during a bear market, or like part of a bull market, but maybe somewhere at the beginning for Bitcoin, I would be very concerned. Currently, however, everything continues to pump until it doesn't. So keep in mind that, at least in terms of on-chain data, some metrics are suggesting that we might be entering, risky territory, and that there's a lot of people sitting on a lot of money. And if they become worried about the market's performance, if they become a bit too bearish because everything is pumping, they might, execute their privilege to start selling off. So yeah, it's really difficult these days to come up with a comprehensive view on any coin, just because fundamentals don't always agree with where we're supposed to be these days. It's just how the bull market works sometimes. People are irrational, and I don't think there's anything that we'll find in our data that suggests BNB is supposed to be worth $300 right now, according to its on-chain volume or just general indicators. But it is what it is. So just keep that in mind.
Yep. MVRV is just one of those metrics that's best used as a supplemental sort of context type of metric that can pair in tandem with others. Obviously, seeing that we're at a 1-year average trader return of 679% right now is pretty eyebrow raising, and not something you're typically going to see. It does mean that a lot of people have been buying on the way up and profiting from that being correct, which is often a big mistake in crypto. But for those who have FOMO'd in, they've been handsomely rewarded up to now. The question is whether they'll actually exit while the price is way up here, or whether they'll hang on to the ride as it eventually drops. Now, it may not drop to where it is now, but it could surge to 400, 500. We'll have to wait and see. But generally, there will be some people who are buying at the top eventually, whenever that happens.
So we got a question in chat if we have seen the volumes on the Binance Smart Chain. Whether, we definitely have. We actually wrote about it yesterday. Gary, if you want to share a link to that insight. I think, just to be clear, I don't think that it's a surprise that BNB is pumping. We actually mentioned it last week. For the past couple of weeks, we've been talking about these ridiculous fees on the Ethereum blockchain. So Brian, if you want to just share what the fees are looking like, the average fees for Ethereum. I think we're still at about 19 or something, 21. Okay, $21 is an average fee to interact with the Ethereum blockchain at the moment. So we've been harping on this for the last 2 or 3 weeks, just mentioning that because of this, we had a couple of hypotheses. Hypothesis number one was that Ethereum was going to struggle. And I think, yeah, it's growing, but it's still struggling. Like, compared to other assets, it's kind of a measly performance so far. However, we have seen that, in the past, during the summer, when the fees were this high, we have seen a decline in the amount of on-chain activity on Ethereum, especially when it comes to daily active addresses. So far, that's not been the case. So people are actually still using the Ethereum network. Pretty much there hasn't really been a decline in the amount of addresses as the price has risen. So Brian, if you want to overlay the amount of daily or unique addresses interacting with Ethereum, people can see that there hasn't really been any sort of drop off, at least for the time being. So our initial hypothesis was that, we might see this drop off like we've seen back here in during the summer when the fees were high. And that might impact the price of Ethereum in a negative way. This has not happened so far. Although I will say that I think we actually should see more daily active addresses. They're currently plateauing the amount of activity on the network. And given the fact that we're about to break 2K almost, I would actually expect to see a lot more on-chain activity for the past week. So even though it's not declining, it's not growing either, which could be a slight cause for concern. So our initial hypothesis was that Ethereum might struggle. And then our second hypothesis was that this spike in gas fees might do well for layer 2 solutions like LRC and Matic. And yes, both of those coins have had their pumps, but so have many others. One thing that we haven't really considered, and that seems to have really developed over the last 2 weeks, is how this is going to affect other smart chain competitors. And Binance is, they've been very aggressively, acquiring DeFi related projects and tokens. And yes, the amount of volume on the Binance Smart Chain has completely exploded in the last week or so. I think they're currently the amount of daily on-chain activity or on-chain volume on the Binance chain is about $376 billion. So that's higher than Ethereum on a daily basis. So yeah, I mean, there's definitely reason why BNB is pumping, and there are some fundamentals to explain it. I just think that currently, on the other hand, now that we've had like a plus 100% performance in the last 48 hours, I think a lot of these on-chain indicators are claiming the opposite. They're claiming that there's been a bit of an overreaction of the market towards the BNB coin. But I mean, honestly, I would be scared to call it a top. Just because I think the market is still quite angry at Ethereum, and it's taking it out on BNB for the time being. So, I mean, I've seen more and more comments on Twitter being like, Ethereum has had all this time to solve its scalability problems. It is completely it's justified that its price performance is lagging compared to Bitcoin, Binance, even Polkadot. So, I think BNB could even continue to grow higher. Just keep in mind that according to some on-chain indicators, it is currently or now is in, comfortably in the overvalued territory.
Yeah, I've got some more things I can show on Binance Coin here. For starters, our volume, as you would expect, our volume metric is just through the roof. As of, let me make sure this is on a 1-day candle, actually. So I want to just make it a little bit of a simplified view here. So we've got 1 day active addresses, 1 day volume. I'll also make it, excuse the stutter on that, 1 day social volume. And we're going to put them all together. And we can see that social volume actually isn't quite caught up to where, you know, volume is. We had bigger discussion rates a couple months ago in late December, and then a bigger discussion just about 1 month ago. For reasons I don't remember myself currently what this one was, but price wasn't doing a lot. It was growing a bit at this time, but nothing crazy. But Binance Coin here, it's only being discussed at, you know, mildly. I guess I'd put mildly in kind of a subjective type of terms, but there are clearly not as much crowd discussion as you would expect compared to these spikes here in the past. But volume, as you would see, is going through the roof. We're at, on February 9th, we had $7 billion in volume there. It's come down a little bit. And I actually, let me make sure it's on the last month here, just to zoom in a little. It's actually, why is it looking different there? Let me put it on 6 months. Yeah, so it's actually, so based on the recency, it's actually a little higher than I expected. So excuse me.
I think, it was just the way that you initially set up the.
Yeah, the last week was cut off for whatever reason. So
Mhm.
sorry, it still looks as though like the social volume is about where it is in late December. I would expect it to be way higher though. So
Yeah.
it's certainly in the crowd discovery phase now. And volume actually got up to 15.4 billion yesterday. And it's following that up with what looks to be another pretty big day on volume and social volume. Now, just remember, typically, guys, when social volume does get up here, now that we see that it is up here, I was surprised when it wasn't when I was looking at a week ago on the data. But since it is, we need to remember that when crowd discovery tends to factor in, and it's on our emerging trends, which it has been, it's a sign that a local top is imminent. It may not happen immediately, but as long as crowd discovery is putting BNB around the top 5 or so, specifically the top 3, that is an indication that people are starting to FOMO at dangerous rates, and that will usually lead to a correction. We had an initial study that said that there's a price retraction of about 12% over the next 9 days after a pumping asset reaches the top 3 on emerging trends. And the latest study, Dino, if you can tell me that exact number that you found.
Yeah, I think it was about 13% in according to our latest study. So if you go to our social trends right now, so for those that are unfamiliar with the metric, you'll see that Binance is the top trending word. So at the moment, Binance or BNB as well as BSC, which is Binance Smart Chain, are the two top words according to our social trends. Now, social trends is simply a list, a dynamic list that gets updated every hour, which shows the words or the topics that are gaining the most social volume or the most amount of mentions on crypto-related social media, and this is tracking over 1,000 different crypto-related social channels. So obviously, the first two lines are BNB and BSC because everybody's talking about the Binance coin's massive rise. Like Brian said, when we used to see these types of moves in the past, very often when a coin ends up in the top 3 positions on this list, it means that it has reached so-called peak hype. Everybody is very much aware of the rally. Pretty much everybody has bought in. They wanted to buy in. FOMO is pretty much permeating all discussions, and therefore in the past, so on a study of 650 different instances when a coin ended up in the top 3 positions on this list, on average, the price performance of those coins has dropped by minus 13% in the next 2 weeks. Keep in mind, obviously, like I said before, this is a bull market, so anything goes. But once again, BNB seems to be entering this super overvalued territory by some metrics. And then you can see Ethereum is actually number 3. in the social trends. But I don't think this actually has to do with the pump. I think it has to do with the lack of pump, or the lack of Ethereum's ability to cross the 2K mark, while BNB
and the hype
is
around
just
2000 as well.
exactly. But while BNB is just soaring. So for now, Binance. So BNB is number one, BSC is number two, Binance is number five. Obviously, the crowd is very much aware of the rally, and everybody's talking about it. In the past, when everybody is talking about the coin while it's pumping, our social studies have shown that that can be a pretty negative. It can have a negative impact on the price of the coin. So something to keep in mind.
Yeah, and we can even compare it to Ethereum and see how it's fluctuated between the two. Keep in mind these red and blue bars are relative. They're measuring versus that particular keyword as opposed to on the same axis here. So BNB is actually looking like it's lagging behind in terms of Ethereum talk, which is interesting to see. I would not expect this trend to continue. In fact, I think that as BNB gets close to its local top, you'll see its social volume kind of rise and eventually move past Ethereum. But based on this alone, it looks like BNB's biggest hype was right around 24 hours ago. And even though BNB's price is
actually change the price. So this is showing the Bitcoin's
right.
price in the URL. Or you can just go there. Even
BNB
better.
happens to be there. Yeah, usually it just shows the top three or so. Did it change though? Yeah, I'll just change it in the URL. It doesn't look like it changed.
Yeah, so it's Binance/coin. Well, it shows it in URL as BNB. So maybe just refresh the page.
Yep. There it is. So yeah, it's pretty clear that the social volume actually peaked when it was here on the what looked to be that initial plateau, and everyone said, all right, this is the local top, and it absolutely was not. And crowd interest actually has not bounced back yet. Could be due to the time of day. Obviously, the US is still kind of waking up.
Yeah, I think it could be the fact that we're not showing full data here. If you go to BNB's actual chart, you'll see that the social volume is continuing to rise as we speak. Mm-hmm.
Yeah, and social dominance, which I can show as well, might be useful in this case because it's going to show the percentage of mentions compared to overall mentions at a given time. So social volume, I'll overlay there, and dominance, I'll also put on the same chart. Let's try that one more time. All right, so I'm going to put that in bar form. Actually, we'll make it area form, and I'm going to zoom in to last month. And we get a pretty good look at it with the social volume bars. I'll even make it the last week, really get a close-up look. We'll go, that's fine. So social volume here, I know the lines are slim, but you can see here that it peaked right about there, which was about 8 hours ago. And now we're still in a pretty high range, but the volume bars are actually coming down, which means crowd is essentially not as hyped as it was when it peaked right here. We'll probably need to see another spike to really justify another local top. But look at the social dominance bar. Even though the social volume bar is down, this hour, the latest hour that just finished about an hour ago, this was the highest social dominance that BNB had since what looks like January 23rd, so just about a month ago. But basically 21.9% of the crypto discussion is related to BNB right now, which is obviously astronomical.
And also one other cool metric that you might want to show for BNB is the network realized profit or loss. So what this metric is trying to calculate is the overall daily ROI of the entire of all the coins moving on the of the network. So there's going to be this massive outlier if you I think it's on January 20th or something. So
Right here,
yeah,
yeah.
that one. That was just Binance internal reshuffling of its wallets and stuff. So that should be, if you can zoom out of that, so we can show what the network realized profit or loss is looking like for the past month or so. You'll see that. The idea behind this metric is that we first take the coin for each time that a coin sort of moves on the blockchain, right? We take the price that it was at which it was last moved, and we assume that that is its acquisition price. And then we take the price at which it moved now, and we assume that it is its sell price. So this metric makes a presumption that all transactions on the blockchain are speculative in nature, that they are buys and sells. And therefore, it should always be taken with a grain of salt, especially for coins like Ethereum that have a bunch of other use cases, not just means of payment. So Brian, if you want to zoom into the last month, we can see.
Yeah, this outlier is kind of skewing
just
that. I'll just
outside
go
of
to
that, just outside of that one.
You mean inside it without the outlier, like the last week?
It.
Got it.
Okay. I think that's also good. So you can see that the spikes in network profit loss. So the higher the network profit loss, that means that coins that are moving on that day are moving at significant profit. So it suggests that people are starting to take profits and starting to kind of reduce their exposure. In the past, for Binance Coin in particular, we have seen similar spikes in network realized profit or loss sometimes coincide with local top. So Brian, if you like, for example, if you look at the last 6 months of data, yep, and then you take that last spike in network profit loss outside of so ignore that one and take the one that's the closest to the left axis.
Oh, over here?
Yeah, so if you sort of zoom in on that particular spike, maybe 2 weeks before and 2 weeks after. There we go. Yeah, so this is what happened the last time we saw these types of massive spikes in net profit loss. Right on top, we saw a huge amount of coins being moved at significant profit, suggesting that people were starting to sell their bags, starting to claim their profits and reduce their exposure. And in maybe 3 to 4 hours afterwards, we had a massive decline in BNB's price action. So this is not the first time that we are seeing these types of spikes in net profit loss. In the past, they have sometimes indicated short-term corrections. Like even if you look at what happened on February the 10th, there was a pretty big spike on in Binance's net profit loss at the time. If you zoom out of that massive spike, just so we can see it. Yeah, that can work. Yeah, so there was a pretty big spike right at the top there, suggesting that people were starting to take some profits as well. Today or in the last week, we have seen several sort of clusters of spikes in net profit loss. So it means that people are, more and more starting to claim their profits, starting to sell off. I think in general, if you zoom into the last week, Brian, I think in general, if you see this type of elevated activity in a non-bull market, it could be fairly concerning. But once again, it's difficult to say, okay, we might be closing into a top, because on average, there's been quite a few red flags that haven't yet sort of materialized in a negative price performance for BNB. But once again, all I'm trying to say is that we have been seeing increases in both on-chain and social activity for BNB that might suggest that it's currently a bit overvalued and that we might see a price retraction. But I'm not confident enough to call it a top, just because it's such a ridiculous rally.
Yeah, it's really impossible to predict, but obviously this is a great metric to look at. If you keep seeing really large spikes like this consistently, that's going to be a from a percentage chance perspective, a larger and larger percentage chance that people are eventually profiting or are going to get burned because of the fact that there's such an immense amount of profit going on right now. So just keep that in mind. These little spikes are not as much of a concern as the big ones. So if you keep seeing consistent large ones, that's really the thing to look out for a sign of a local top there. All right. I want to also show how whales are doing for Bitcoin, Ethereum, and Binance Coin. So I'm gonna
let's look at
find.
that, and then let's take some questions from the audience. So anybody in chat that wants to kind of wants us to pay attention to a specific coin, wants us to do some impromptu analysis, let us know in chat what coins you would like to see, and we'll go over a few metrics. I can almost guarantee to you that many of these metrics are going to be similar to BNB, especially if the coin is pumping. We're going to see some overvalued indicators, but it's still interesting to see where we are at the moment in the cycle. So let us know what coins you would like. Would you like us to go into a bit more in depth in the next 15 minutes or so?
All right, so Bitcoin here, interestingly, if you look at this gold line, which resembles the amount of addresses with 1,000 or more Bitcoin tokens in it, the top, or the time where it got the most addresses actually happened about 12 days ago, February 7th. And since then, even though price has been rising, the amount of whales is beginning to trickle off a little bit. Obviously, if we look in the past year, even when it did this in mid-December around Christmas time, price was able to move up anyways. So this is a relatively small drop. If I zoom out even more, I know there have been bigger drops. So this one, for example, this one back in about a month after Black Thursday, this kind of indicated there was a plateau happening, but eventually the accumulation happened. But look at this long decline here, where there was a plateau in price, and then this big drop, which basically didn't matter because Bitcoin continued to jump up. So there is some correlation on occasion, but the lack of whales or the people taking a little bit of profit up here isn't a major concern. What is interesting is the mid-tier traders, those who have between 10 and 1,000 Bitcoin in their addresses, that's continuing to just plummet as this price continues to rise. We're basically at year-long low levels of around 146, 147,000 addresses, when we were at a peak back here at about 152, 153. So the mid tiers are basically losing out on a lot of potential profit, as you'd expect, while whales are finally starting to take a little profit themselves. But it doesn't mean the rally is going to stop, just as we've made the point with other metrics. Markets can continue to pump despite Bitcoin behavior. We'll look at Ethereum and Binance Coin, which there is a little more correlation between what whales are doing. Beginning with Ethereum, I'm going to take it off of 1,000 or more and change it to 10,000 or more, because Ethereum's price is obviously lower, and there are a larger amount of tokens that can be deemed whale worthy. So this is what whales look like for Ethereum. And I think there's a lot of correlation here between what price does. If you go back to around here, when we had a big drop off from mid-August to about mid-September, look how price kind of fluctuated and ended up plateauing and dropping along with a lot of the altcoins. This was one of the biggest altcoin drops over the past year, right in early September. And then you started to see this slow accumulation turn into a very rapid accumulation just over the last or so, and price has jumped accordingly. So I think whales have a lot to do with what Ethereum is doing, and right now it's right still at the peak of the past year, sitting at about 1,277 addresses with 10,000 or more ETH in them. It peaked at 1,278, so we literally have one less address than the year-long high right now. So it's looking very, very positive by this regard for Ethereum. And finally, BNB. We'll just keep it at 10,000 or more. And right now it's through the roof. This, I think, has had a lot to do with it. On February 3rd, we had 146 addresses with 10,000 or more BNB. That has grown rapidly all the way up to 163. I don't know what that percentage change is, but I think it's probably in the 10 to 15% range. So this, just over the last 2 weeks, there's 10 to 15% or more whales in BNB. And this, in my opinion, is one of the biggest factors for why any alt can pump the way it has been. So long story short, watch this chart closely, guys. I think 10,000 or more is a really good gauge. You could even say 100,000 or more if you really want to get precise with like the very top whales and what they're doing, because they're likely going to have a lot of control into whether this rally continues or puts on the brakes. Do we have time? Why don't we just call it here? I know we promised Ren. Maybe we can touch on it a little bit while we're going over questions.
I mean,
but
we already got
sure
a few coins that people want to look at. So if people want to look at Ren, let us know. But I see Quant, I see Crow, I see Link. So we can take a look at a few of those. And I actually also see a very good question from Brian J. Max, are you on a call? You might want to answer this one. So Brian J says, how much weight do you place on mean dollar invested age? It appears Bitcoin has about 60 to 90 days before that metric hits levels of 2017, 2018 top. So I'm going to share my screen and show what Brian is talking about here. All right, Bitcoin. So I'm going to delete these charts just so it looks bigger. Mean dollar invested age. And let's take, I mean, we can take, the last 7-8 years. So this is what mean dollar invested age looks like. So the idea of this metric, it's a little bit maybe confusing or a little bit complex, but bear with me here. So for every coin that moves on the blockchain, we take the amount of time that it has stayed in its current addresses, we compute the average of all those ages, and then we adjust it for by the value in dollars at which each coin has last transacted on the blockchain. So we adjust it for its acquisition cost, so to speak. You can see here or read here exactly what mean dollar invested age means and how we calculate it. But the idea of the metric, at least, is that it sort of pictures or visualizes redistribution cycles for Bitcoin, right? So the rising slope in mean dollar invested age, like you see here and like you see here, suggests that on average, coins are not being moved on the blockchain, meaning that these are sort of hodling periods where people are not, on average at least, moving their Bitcoin on the blockchain at a rapid pace, right? And then when we see these massive drop-offs in mean dollar invested age, that means that on average, the sentiment of Bitcoin holders has shifted away from hodling and into redistribution. Especially coins that have been acquired at higher prices, because this metric is sort of weighted or it gives more weight to coins that are acquired at higher prices. So when you see these types of dips in Bitcoin's mean dollar invested age, that means that a lot of coins are moving, and a lot of coins, especially that were purchased at relatively high price or relatively expensive coins, are moving. So it suggests these cycles of redistribution from one category of holders to other categories of holders. Now, we have seen this happen several times in the past. Max, we actually wrote about this recently. You want to kind of give your opinion on what each of these
just shortly.
Okay.
Time in the market is the most complicated things. It's more seeing the right condition and whatever time it can. I don't know if we now just to give two options. If we now start pumping from today, tomorrow, and go all the way to 60, 65, 70, just an example, not that we're going to do. And you will see this number going down to around 120. I would leave market right away. But it can also be that we now start correcting, going back to 40, and then go to 60, 70. It might take us like 3 to 4 months. Yeah. So the timing is very difficult because we don't really know the whole complexity of what is happening in the background. Market. Remember, this market reflects some very deep changes in the whole societies. Market just reflects it. Market is the first place where you can see what will happen, like in the next half to 3-5 years in the whole society. And this impact is coming from very deep roots of, I don't know, subconscious, whatever we call it. So and they is very quite complex. No one can predict it. Is it short? Is it very fast, like COVID, very fast down and up, or is it very long, painful process? Yeah.
Sir Max, have to
So
interrupt
timing,
you because people don't seem to see the screen. Max, if you
Oh.
can, the other Max, if you can just make sure that my screen is still being shared. It could be because Maksim is talking and therefore Skype just takes the screen of whoever is talking, and since Max isn't sharing anything, it's not showing up. There we go.
Yeah.
Okay,
Yeah.
should be good now. Go ahead, Max.
No worries. The summary: never try to time. Just be patient, or as relaxed as possible, and the condition will come. There is only one thing which is 100% clear: the condition, the proper condition, will always come. It's not 100% will be exactly as you expected, but it will come. So, and it can come today, tomorrow, in week, in months, in half months, I don't know, in 6 months. Doesn't matter. Just know what you're looking for. Yeah? And one of this is here. It should go lower. It should come close to 100. It should come close to 100. Yeah. Well, it's our belief. Yeah. Don't take it, of course, as investment advice. Remember that we are here in a very experimental area. No one on the market is using this metric. I believe you. Majority, especially crowd, is using this plan B, stock to flow, this useless metrics, or liquidity supply of Bitcoin, also useless metric. So it makes sense. It looks simple, but it doesn't work. This works, but it's complicated. And we believe it will be. It looks on the chart simple, but timing is complicated. We believe it will come to 120, at least it should come, just because of the nature of redistribution.
Yeah, we're currently at about 211.
Around 200, yeah. So we are very close to it, but not there yet. And just because of the nature how market works, it's always redistribution. Early innovators, midterm white acknowledgement, or this is a cool thing, and then latecomers, institutions. So always late, not because of the bet. They're managing too big money. They cannot come into innovation. Yeah. So not timing. See the right conditions. And I honestly repeat to myself too. With timing, whenever I try, it's like 50% time, when not more often, it goes wrong. But when you see, and then at some point of time, you always see the right condition, which you know this is okay. Gosh, should have waited a bit more, or sometimes should have acted faster. But mostly should have waited for more.
Okay, so you think 120 might be a legitimate level to keep an eye on? But yeah, we are in uncharted territory. So each of these distribution cycles, I think it was basically relocation of one group of holders to another. This was like from early sort of blockchain nerds to first wave of cryptocurrency enthusiasts. This one was, basically really the first sort of mainstream cycle for BTC. Currently, I think it's redistribution, a lot of it to investors, to institutional investors. But the idea of the metric is when you see these sort of, so in the past 4 cycles, the bottom of mean dollar invested age have sort of coincided with the top of the bull cycle. The reason for that being is that when you see the chart, the slope start to move back upward, it suggests the redistribution is over. And it usually, in the past at least, has sort of ushered in a new period for the price of Bitcoin. And the new period is usually, a completely new bull cycle overall. Sorry, completely new cycle, meaning bearish correction would be imminent. All right, I have seen QNT and I have seen Crow. So we can start with those two and then move on from there. So let's take a look at Crow first. So this is, what a lot of coins look like these days. It is what it is. I'll show a few metrics that I would keep an eye on as potential sort of warning indicators. The first one would be exchange inflow. And already you can kind of see that it's getting quite high today. So exchange inflow is the amount of coins in this case CRO, that are moving away from private or individual addresses and into known exchange wallets. The idea is that the higher the exchange inflow of a coin is, the more sell side pressure there is. And therefore, it could drop the price of the coin in the short term. So if we look at the last month of data, we can see that the biggest spike in CRO before today was before we saw slightly before this sort of short-term correction for CRO. So maybe if I look at the last week, yeah, it seems like we have already kind of started. So in the past couple of hours, there has been a major sort of uptick in the amount of CRO being moved to exchanges. It seems like it's already starting to get priced in. Exchange inflow isn't necessarily sort of long-term. It's not necessarily going to say that going to mean that we're going to see a long-term price correction or retraction, right? It just means that in the short term, a lot of people are taking profits. A lot of people seem to be wanting to sell their bags, and as a result, a short-term correction might be, in the cards. So that's one thing that I think is kind of concerning, right? The second thing that I would look into is, again, network realized profit or loss. So this metric, like I said, maybe 15 minutes ago, what it shows is when it spikes like this, it means that on average, coins that are moving on the blockchain at these points in time are doing so at significant profit. And then when it drops like this, it means that the coins that are moving at these points in time are moving at a significant loss. And actually, for CRO, you can see that if we look at the last 6 months, it's so clearly, inflated right now. There's a lot of coins being moved at significant profits. It seems that a lot of people are starting to take some, take parts of their bags and reduce their exposure. In general, it seems, according to a few on-chain charts, it seems that there is a sort of an inflated amount of sell-side pressure for CRO, which in a bearish market would very sort of, I think, fairly quickly and easily dismantle this price rally. In a bullish market, however, once again, anything goes. I do think that it's concerning that I personally wouldn't sort of look into opening an entry position for CRO at these levels. Not financial advice. It's just what some of these metrics seem to suggest is that there seems to be a lot of people looking to get out of the coin for the time being, and therefore we might see a short-term correction. That doesn't mean that it can, after the correction, go back up again. It just means that in the short term, we might see a little bit of a cool down period. Now, I want to show this as well. It's very interesting, and sometimes we often see this as a sort of a bottom indicator for a lot of our coins. Like I'll show for IFI, you can see the same thing. So these major dips, right, in a coin's network realized profit or loss means that a lot of coins that are moving at this point in time are doing so at significant loss, at major loss. So people that are moving coins at this point in time on February 1st are doing so at a massive loss, therefore suggesting that if we assume that all transactions on the blockchain are speculative in nature, right, it suggests that people are capitulating, that everybody is getting out of the coin. That they are pretty much giving up on the coin's price action, and therefore sometimes these massive drop-offs tend to coincide with local bottoms because they are indicators of holder capitulation. So you can kind of see that it came right at the bottom for CRO here, right before we started breaking out again. It's not always going to happen, but these types of moves downward, especially if they are aggressive as this one was, can suggest that pretty much everybody's given up on the coin. And when a lot of people are giving up on the coin, if there's enough buy side pressure and if the other fundamentals are relatively fine, it could suggest a period of price recovery for CRO. You can also see like similar thing here, right? Even here to an extent, these sort of, for example, especially here, okay, I'm going to zoom in so you can see it. Especially here, after a period, so this is from February 8th to February 15th. So a 7-day period, right? CRO just keeps growing like crazy. The moment that it dumps, we see for the first time, really, if you discount this one, this very sort of thin drop off, we see a cluster of network profit loss dips. suggesting that people are starting to sell their bags at relatively significant loss. So pretty much everybody that has kind of probably bought here is now getting the hell out of the coin. Again, if there's enough buy side pressure, if there's enough sort of bullish, appearance and bullish presence in the coin, this sort of holder capitulation can suggest the beginning of a price recovery for it. So that's something also that I think is quite interesting. We can also look at social volume for Crow, although I don't think there's much of it. Maybe there is. Yeah, it's growing. Yeah, so the amount of activity, the amount of mentions of CRO on crypto social media is also growing. Like we said already, this is not a great sign for the coin in general. I don't think that, the higher the amount of mentions of a coin, the more likely it is that everybody that wants to be in the rally is already in the rally, is already aware of the rally. Therefore, there's less and less buy-side pressure, right? And that's one of the reasons why we see these spikes in social volumes very often coincide with short-term price corrections. So overall, not great, but again, I'm not going to go out of my way to call anything that I'm seeing today a top just because I've been proven wrong a couple of times in the past couple of weeks. I see fundamentals that seem crazy overvalued, and then sure, maybe there's like a small correction and then we go higher. So for the time being, I'm just gonna say this seems a bit concerning. So, do your own research and stuff. But yeah, all right, moving on to Quant. So Quant, okay, this is what it looks like. It's a bit more of an organic pump compared to CRO, at least. There's a slightly more choppiness, and in general, it looks like its moves up are not as prominent as for QNT. As for CRO. So let's start with just general on-chain activity for Quant. Let's start with the amount of daily active addresses. What is the total amount of addresses that are interactive with QNT? Because what you would expect to see is you would expect that the more addresses interact with QNT, the price would follow in that direction. It would suggest in general there's more interest in the coin. It would suggest there's more buy side pressure for the coin, and in general it would suggest that the crowd is adopting the coin as it continues to rise. When we see these types of divergences, however, where price of the coin is growing but the amount of on-chain activity is declining, that can sometimes be a relatively concerning signal as well. Why? Because it's simply suggesting that the interest of holders and actual on-chain, investors, basically the general interest in the network and the token is declining while its price is growing. Therefore, there's going to be less speculative demand, both buys and sells, which could, exhaust the price action in the short term. So this is one signal that I would think is kind of concerning. But still, Quant's daily active addresses are fairly high. Despite the fact that the pattern is kind of concerning, there's still about 500 daily active addresses interacting with Quant. That's going to put it in like the top maybe 30 or 40 coins on the Ethereum network easily. So there's still like a lot of people actually using QNT, both for buys and sells, maybe even for other purposes. But the trend is not great. All right, let's look at the total amount of sell side pressure for Quant. It seems like it's similar to Crow. It's growing. It's obviously this spike. Let's see if I zoom in a bit. There's been one big spike here and then another sort of cluster of spikes before this correction today. It seems like there's in general a rise in sell side pressure. Again, unsurprising. Actually, here I would like to see the total supply of Quant on exchanges. All right, so this is also something that in general would be concerning. Is that the amount of QNT on exchanges has kind of been flatlining for maybe a month here. And then as the price started to rise, we are starting to see more and more QNT being moved to exchanges, again, presumably to sell. When there's a rising supply of coin on exchanges, it suggests a forming sell wall that might be a bit too difficult for bulls to absorb. Again, not a great sign. For example, let me show you what's happening with Ethereum right now. And one of the reasons why Ethereum might be doing fairly well is that there's been less and less of the Ethereum supply on exchanges for the past 3 months, basically ever since the Ethereum 2.0 deposit contract went live. And this is, I think, one of the main reasons why we're seeing so much Ethereum be withdrawn from exchanges, is because, staking, other sort of DeFi related use cases. But in general, there seems to be a declining sell side pressure for Ethereum, which should bode well for its price action overall. We'll have to wait and see. But this is sort of what we very often see, is these types of inverse correlations between the amount of coins on exchanges and its price action. For QNT, it's the opposite. They're currently going in the same direction. So something to keep an eye on. But once again, like I said, I wouldn't necessarily just call it the top. I would just call it fairly concerning. Actually, we haven't looked at MVRV at all. I'm curious what Quant's MVRVs look like at the moment. So let's take the last year, and let's take the 365-day MVRV and the 30-day MVRV. All right, so let's start with the 30-day MVRV. So for those of you that have joined us recently, MVRV is an on-chain indicator that tracks the average profit or loss of a specific group of holders. This is showing the average profit of all addresses that have acquired QNT in the previous 30 days, right? So at the moment, their average profits are about plus 21%. That means that, everybody that has acquired QNT in the past 30 days, on average, they're about a fifth up on their initial investment, right? As a rule of thumb, the higher the MVRV, the greater the unclaimed profits, and the more likely there is that some people start taking their profits, reducing exposure, and apply sell side pressure. On the other hand, the lower we are, like here and here, when people are below break even, the more undervalued the coin is according to on-chain data, and therefore it might be an interesting or an opportune time to buy, like it was actually for QNT here as well as here, right? So at the moment, it seems like QNT's 30-day MVRV ratio is in the sort of overvalued territory, but not as high as I would actually expect. Let me see. Yeah, it's the same thing for 60-day. It's actually sort of declining, probably because of these two drop-offs that happened in, today and maybe a week ago. So we peaked at about plus, let me go back to 30-day. We peaked very shortly at about plus 95%, but this is a clear outlier. I actually want to say that the actual peak was at about plus 68%. And that's fairly close to the last time we see Quant's 30-day ratio peak at about plus 68, 73%. So if I take these, take the line and draw it here. Yeah, fairly similar. So this is usually where we see sort of unsustainable levels of profit taking of profits. And then also here, it seems like it's a period where, or the amount of profit where short-term holders start selling, right? So at about plus, what is this? 40%? No, actually, yeah, it's about plus 40%, 40%. 41%. So these also seem to be levels at which short-term holders start taking some of their profits at about when they're about plus 40% of their initial investment, tanking the price in the process. So for the time being, at least, short-term holders aren't really that much up on their initial investment to warrant worry from an MVRV perspective. In terms of long-term holders, it's a different story, however. Long-term holders are swimming in cash. So QNT's long-term holders are currently about plus 158% on their initial investment. The MVRV has peaked at about plus 200%. So, it has grown higher. But overall, you can kind of see, in the previous year, we've never been even close to these levels. So it's obviously just a bull market outlier. If we look at the all-time for QNT, obviously you need to exclude the first couple of months because it's an on-chain indicator. So if we look at the 2019, you can see that we're not at those levels yet in terms of long-term profit margins. However, like I said at the beginning of the video, the MVRV ratio tends to flatten out over time. So like I wouldn't necessarily expect it to reach the same levels as it did in 2019 as it did in 2018 as well. But overall, you know, the long-term QNT holders are also like plus 150% currently in profit. We have seen it grow higher in previous bull cycles, so there might be more room to grow. And this is why I also am kind of, you know, squeamish about calling anything too concerning, because yeah, for example, we've seen the amount of QNT on exchanges grow, the amount, the general sort of MVRV valuation is high. However, you know, in previous bull cycles, it's, you know, we've seen the same pattern, and somehow these coins will continue to grow for a while. Again, it's, you know, everything needs to be taken with a grain of salt when it comes to the bull market. So some concerning patterns like QNT's on-chain activity starting to decline, MVRV being fairly high, the amount of QNT on exchanges starting to grow. But at the same time, you know, we have seen these and other indicators kind of grow even higher in 2019. So who knows, right? All right, I think that's going to be it as far as the question-taking portion of our call is concerned. I want to plug in our latest weekly report. So as you guys may or may not know, everybody that signs up for Sandbase Pro, you get, first of all, you get 2 weeks trial, so definitely try it out. And then every week, we publish a weekly pro report. So currently, or today, we are publishing a data science report that we've done. 2 weeks ago, we've published an article or a study that we've done on social data, so on social sentiment and social volume, and how these metrics seem to, you know, interact with the price of a coin. And there have been some very interesting results, pretty much confirming what we already saw a bunch of times on the charts, is that when the social volume rises, as the price rises, it usually signals peak hype and can lead to a short-term correction. This week, we are actually looking into exchange inflow as a metric. So the question that we asked ourselves is, all right, when we see these spikes, and I think Crow is actually even clear, when we see these types of spikes in exchange inflow, what is the average price performance of these coins in the like 14 days before and 14 days after? In other words, do these local exchange inflow peaks coincide with you know, price corrections? And so you'll have to read about that in our latest insight, our weekly pro report that we're going to be publishing today. There's a bunch of charts and a bunch of different sort of hypotheses that we've tested. But if you're interested in whether the sell side pressure or the rise in sell side pressure actually impacts the price of the coin in the short term, and exactly how it does so, we'll have more on that you know, later today in our weekly pro report. So definitely check it out. Anyway, thank you everyone that has stayed until the end. If you like this video, be sure to like it and subscribe to our channel. If you haven't already, check out app.santiment.net. There's a 2-week trial if you haven't tried it already. After that, it's just $49 a month, which I think is, especially in these sort of, you know, if you were holding any bags before January, you're probably well off to buying a Sandbase Pro subscription. Just keeping an eye on fundamentals just in case, right? But anyway, thank you very much for another week of a sort of weekly coverage. We'll be back in 7 days. Brian, anything you want to tell the people before we sign off?
Great stuff as always, Dino. Appreciate all of the questions, and just want to remind everyone that referral links are open and able to be activated just by going to your account settings and clicking create referral link. You can share with anyone in your respective crypto communities. Anytime they actually use our platform and sign up, you will get 25 to 35% of that sign up cost. So it's a pretty lucrative deal that we offer, and we encourage you guys to check it out as we continue to grow. Any help spreading the word is always appreciated, and we thank you all for being a part of this call and future ones.
Thanks, guys.
Take care.
Soon.